JBlog, August 22nd, 2010. Starting out with a headline from the Wall Street Journal. It talks about how investors cannot figure out why there are corporate profits that are very strong and yet an economy that remains weak. And the answer to that is quite simple. It is that this recovery or these profits, these corporate profits, have basically been conducted on the backs of the workers, which is why we have unemployment continuing to go up. Companies are not hiring, they're firing. They're expecting everyone to do more work for less money. Um, and of course, they're making good money because governments around the world continue to give them money. So from that point of view, life at the top is very good and life at the bottom is very bad. And there's the disconnect between those two. And they don't get it, just like Wall Street doesn't get it. Why is that? Anyways, just an interesting sideline about how um, the powers that be just do not understand what is going on. Um, it is very funny to watch. Um, Other news that we have, Asian computer shipments are down. So Taiwan is in a bit of trouble. That's certainly not good, and that's certainly not what we're hearing. But then we have a piece here. Florida would like to charge BP more money. And I just love this part here. Billion to plug state's budget gap. It's not about oil spills or anything like that. It's just about we spend way too much money and now we want somebody else to pay for it. Sign of the times. The city of New York is cutting its estimate. It no longer feels that its pension plan can achieve 8% rate of return, which has used for the last 10 years. It now has reduced it to 7.5. Good luck is all I can say to that. I don't know why something as big as a pension plan um, could achieve 8% rate of return. That is quite preposterous. So there'll be more holes to be plugged there later. Of course, the big news last week was that jobless claims rose to 500,000 from um, the estimated number, and that once again surprised everyone unexpectedly. I always love that unexpectedly. Nothing seems to be expectedly these days. Lots of economists are being paid lots of money to come up with these wonderful numbers, and they don't seem to work, and then it's always unexpectedly. Um, Again, same thing. Jobless claims climb. Philadelphia factory slump. So we're probably through the inventory rebuilding cycle now. But yet here we have another from exactly the same site talking about that payrolls have increased in 37 states. Um, it really is. There's so much strange news out there. Um, a few hours ago, this came in that 8 bank failures now bring the number to 118 for this year. So certainly, no doubt that we're nowhere close to the end of bank failures. Going back to the markets, the S&P 500 has basically been doing very little to nothing since May. It achieved a high in in April, and then it basically put in a double top here. Um, and now it once again looks quite weak. There is a 1030 crossover happening right here. There was a little crossover there, and once again this has crossed over, so that is quite bearish for the time being. But we are at the bottom of the stochastic, um, so we'll see where that goes. Oil. Oil has basically broken a support line quite a long time ago. There seems to be a new support line, a trend that is forming. But that has been quite a significant drop in the price of oil in the last 2 weeks. Again, there seems to be a realization that this recovery, quote unquote, is not what it is made out to be. And I think there's going to be a lot of people that are going to wear egg on their face on Wall Street. In fact, I think Wall Street is in a ton of problems. They figured that there would be a strong recovery and that we'd be booming again. Most of these guys are too young to remember what a real um, currency crisis looks like and how long it actually takes. So they went bye bye bye, and now they're stuck. They're sitting on a whole bunch of paper that the retail investor does not want to buy from them, that the institutions and the retirement funds do not want to buy from them, and now they don't know what to do. So they're sitting there and they're wondering, what do we do now? And there's going to be blood in the street yet to come. And I think the realization of that is finally coming through. It'll be interesting to see. Natural gas has broken a support line. Now you can obviously draw trend line, support lines any which way you want to. Here's one that I drew a little while ago, and it was definitely broken. So if natural gas breaks, that kind of means that manufacturing once again will not need as much energy. Gasoline has already broken the trend line. Gold bounced off the trend line, so there's still lots of uncertainty in the market. Silver's basically be going sideways. Gold over silver is still very high, so again, no recovery here. Neither if there was a recovery, then silver should be worth a lot more in relation to gold than it is right now. The VIX still shows very much, not very much concern out there, not a lot of fear, not a lot of premium being charged for options that are being sold. Again, there's going to be more egg coming up there. Then another when you look at the price of commodities, don't always look at them in US dollars. I also like to look at them, for example, in euros. Here we have the price of gold in euros, and the chart looks completely different from that of gold in US dollars, but gold is once again going up here. Here's another way of looking at it, which is gold over oil. How many barrels does it take to buy an ounce of gold? And it's 16 barrels. It was down to 14 barrels. At the lows it was at 13 barrels. So people, and it's an uptrend, so people are much more interested in owning gold at this point, i.e. Reserves, real money versus oil. The US dollar has had this big jump up, then fell down, and is climbing a little bit again, which once again spells uncertainty. Whenever there's uncertainty, people will go into the US dollar versus other currencies. Here we have copper. Copper almost looks like Head and Shoulders. It has certainly not achieved new highs here, and it has broken through some support, so we'll see where that goes. Long term, again, this is the New York Composite. It's been going sideways, just a little bit of a uptrend here that happened July, August on some good news, but the good news seemed to be fading. We once again have a crossover here, and which will most likely lead us to a lower high again, and we can possibly retest the lows that we saw in 2008. That would certainly be interesting. Those lows would be right down here, and if that were to happen, then that would be quite bad for a lot of people, and especially for Wall Street. But you know, we don't affect the market, just have to trade with it and see how that goes. I do not see a recovery. I see a whole bunch of liquidity that has failed. Banks will be in trouble. U.S. government is no longer able to bail them out. The U.S. government is in trouble. There is way too much debt that interest needs to be paid on. This is, in my mind, going to be very ugly, but we'll see how that goes. It's all the time I have. Good luck next week. All the best, and happy trading.